Hello and welcome back. In this lesson we are going to look at trusts. And before we move to trusts, which is our second last topic, actually this is not a topic, it is just a small minor topic. When I was telling you when I think it was first lesson, introduction of ACCA P6 taxation, I told you that there are some major topics and there are some small topics as well. So it is one of the small topics. It is not very important from exam perspective, but you have to remember it as far as trusts are concerned. All right, so let me share the screen with you so that you can just see on the screen. Here you go. I've shared the screen with you. As you can see on your screen, these are trusts, chapter number 19, trusts. Page 72. Now actually before we move to trusts, let me show you questions which you have to attempt for inheritance tax. Now this is the list of the question which you can see on your screen. This is the list of the questions which you have to attempt. Now please pause the video here and note down all the questions. Now I assume you have done it. First question is question number 14. Although there are quite many questions, I've just picked some of them, and there are quite many of inheritance tax. I've just picked some of them. So first one, it says question number 14. This is question 14 part A, and it will examine overseas aspects of inheritance tax. So you will have to consider overseas aspects of inheritance tax. Who shall pay inheritance tax and who shall not pay inheritance tax? After reading the full notes, of inheritance tax, you will be able to do this question. So please make sure before going to the questions, please make sure that you are confident on the notes, and then move to the questions. Otherwise, you will be stuck in the questions and you will think, what is going on. Next question is question 15, part B, and it deals with death tax and related property rules. Now, related property rules we have seen in a couple of lectures before. And after that, it says it is question number 16, part B, and it deals with self-assessment portion, or you can say ethical portion. So it will be dealing with ethics, then how you have to react as a professional accountant when something like something messy comes up. Like the client is playing up with the rules and something like that. So it deals with that portion. And I told you that this is very important because it has been examined in almost every sitting. Minimum marks of 5 marks. So professional marks, ethical portion is examined in almost every sitting. And the next question is question 17, part A, and actually part A1. It deals with basic inheritance tax computations or theory. So it is just a basic question. Then in part 18, question 18, part C, it again deals with overseas aspects and residue of estate exempt person. Excuse me. Now in the previous lecture, I showed you when residue of estate is left to an exempt person, what would need to be done? We'll have to gross up the assets. So it deals with that question. And the next one, question 19, part A, deals with inheritance tax on gift of shares. So it deals with gift of shares. And then question 21, part A and part B, that is also an important question. And I think one of the questions deal with that aspect as well, when the deceased person leaves some amount to the charity to pay less tax. So it deals with one of that aspects as well, I think. All right. So that was our questions of inheritance tax. Now let's move to our topic, which is our this lecture topic, trusts, chapter 19. Excuse me. Now in inheritance tax, let me also tell you that trusts are still part of inheritance tax. So it deals almost with inheritance tax as well. Now when we make a transfer, I told you that transfer could be of two types. One is transfer to an individual, and the other one is transfer to a trust. Now we are talking about transfer to a trust, which is chargeable lifetime transfer. Now when you make a transfer to a trust, Now until because I told you that when you make a transfer to a trust, it will remain with the trust for some time until the person who will be eventual owner will become older enough to be responsible of that, to know what he owns, right? So when you make a transfer, you make the transfer to a trust. Trust will look after the asset for some time until the eventual owner becomes old enough to take care of that asset. All right. So it could be 1 year, it could be 10 years, it could be 20 years. You never know. So when you make a transfer to a trust, it will remain with the trust for some time. Now, if it remains with the trust, there is one tax, something called principal charge will arise. Now, if it remains with the trust for some time, something called principal charge will have to pay. So trust will have to pay some tax on that, and that is called principal charge. Now, when that asset leaves that trust, when the asset is transferred from the trust to the eventual owner, then there is another type of tax, which is exit charge, that you will have to pay as well. So there are two types of charges. One is called principal charge, another one is called exit charge. Excuse me. So one is principal charge and other one is exit charge. All right. Let's move to the notes then. It says inheritance tax charge on discretionary assets, discretionary trust, sorry. The property in the trust is known as relevant property. So long as it remains relevant property, it is subject to the principal charge on every 10th anniversary from the start of the trust. So principal charge you will have to pay. So if you have transferred an asset to a trust, and if it remains so for 10 years, if it remains with the trust for 10 years, on first 10th anniversary, on 10th anniversary, there will be something called principal charge. You will have to pay principal charge. All right. Now, if the relevant property leaves the trust, an exit charge also arises. What is the principal charge? The principal charge is 30% of lifetime tax. Now, could you please tell me what was the death rate? What was the tax rate on death tax? 40%. You are right. What was the lifetime tax? Half of death rate, which is 20%. And there was 25% rate as well for lifetime if the individual is paying the tax. All right. It will tell you in the question whether the individual is paying or whether the trust is paying. All right. Now, in principal charge is 30% of lifetime tax. What is lifetime tax? 20%. So 30% of lifetime tax, 30% of 20%, which is 6%. So principal charge is 6%. As it says on the screen, the principal charge, inheritance tax, is charged on the value of the property in the trust. At each 10th anniversary of the trust, then the inheritance tax principal charge is 6%, which is 30% of the lifetime tax of 20% of the value of the property at the 10th anniversary. Then comes the exit charge. Now, exit charge could come in two occasions. Now, as I told you that you will transfer the asset to the trust. Now, the trust may remain with the asset may remain with the trust for 10 years, or the eventual owner can take out the asset out of the trust before 10 years. All right. So the asset can be taken out of the trust before 10 years or after 10 years. So we will have to pay exit charge either after 10 years or before 10 years. So that is the difference between them. So it depends on how long the asset has been with the trust. Exit charge will be accordingly. Now, exit charge before first principal charge. Now, what was the principal charge? Principal charge was charged on the after 10 years. The asset, if the asset is with the trust for 10 years, on 10th year's anniversary, it was charged. So it says exit charge before the principal charge. If the relevant property leaves the trust before 10 years of the creating a trust, then the exit charge will be exactly the same like principal charge. Now, if the asset is leaving the trust before 10 years, then you will charge the exit charge, and it will be exactly the same, which is principal charge. And if the exit charge after the principal charge, now if the asset is leaving after 10 years, then the principal charge has already been charged on that asset because it has spent 10 years with the trust. Now there will be exit charge as well. Now, but it will be different in this case because the principal charge has already been charged. So it will be, if the property leaves the trust after principal charge, then the inheritance tax charge is 6% of the value of the property, reduced by multiplying by a fraction that reflects the time elapsed since the 10th anniversary. So we will have to take the 6%, but we will have to multiply it by the quarters divided by 40. Multiplied by the quarters divided by 40. So say for example, it was £100, so you will have to take 6% of that. So it was, say for example, it was £1,000, and you have taken 6% of that, so which would be £60, but you will have to multiply it by the quarters divided by 40. Now what are the quarters? Quarters which are elapsed after after 10th anniversary. Say for example, it has been 11 years when the trust is moved out of when the asset is moved out of the trust. So asset is moving out of the trust after 11 years. So the principal charge was charged on 10th year's anniversary. So another year has elapsed with the trust. So in 1 year, how many quarters are there in 1 year? 4 quarters. So if there are 4 quarters in 1 year, then we will have to multiply it by 4 divided by 40. Alright? So that is the way to calculate the exit charge in this case. And after that, it says that examiner has stated the student will not be expected to perform a computation on principal charge or exit charge. So you will not have to do any computation on that. However, what you have to do is you will have to learn this, and you will have to know the theory about it. So examiner could say what is principal charge and what is exit charge. So examiner could ask that. Alright, now let's do another thing, which is stamp duty on shares and securities. Now stamp duty tax is another type of tax which you will have to pay on some assets. So in some cases you will have to pay it on shares and securities, and sometimes you will have to pay on land as well. The first one is on the securities and shares. How much is the rate? It is 0.5% on shares and securities, and but it is 0.5%, but you will have to take nearest £5. Now as you can see, the question says, there is an example beneath that. What would be the stamp duty on shares sold at a value of 5769? So 5769 is half, 0.5% of that. It comes to 2885. It is coming as 2885, but we will round it to nearest £5, so we'll take £30 instead. The next one is stamp duty reserve tax. Now it is exactly the same thing, but it is on the shares which are transferred electronically. So this is on the shares which are transferred electronically, but what is different here is you will not have to round it to the nearest £5. You will have to take exactly the same thing, exact amount, how much, whatever the amount is. Now in this case, the question says 5769 was the value, and the rate of tax is 0.5%. What would be the total amount? Total amount is 2885 in this case, because we are not going to round this one. We will take the exact amount, how much was it. Alright. Next one is the stamp duty land tax. Now this is the land tax. When you buy the land, you will have to pay tax on that. It is different for non-residential property and residential property. As you can see, first table is for non-residential property, and second one is for residential property. But be careful, these are not banding. Now if the question says the property value was £500,000, then you will just have to apply 4%, straight 4%. If it is non-residential, you will just take straight 4%. You will not do it like income tax banding. So you will just take straight 4%. Alright, and just beneath that, it gives you a question as well, which says what is the stamp duty land tax on purchase of shop for £350,000. Now the value of the shop was £350,000. Which area is it coming in? Which band is it coming? £350,000 is coming in 3%, isn't it? Yeah. So you will take 3% of that, which is coming as 17,500. Now please make sure it is a mistake, I think. Please check on the calculator. It is not 17,500. It must be less than that. Alright? it must be 11 something. Anyways, let's move forward. Next one is residential property, and now this is exactly the same thing, but the rates are a little bit different. In this case, the property value is £350,000, and this is coming in 5%, if you see. So we'll take 5% of that, which is coming as 17,500. All right. Now, exemptions to stamp duties on transfer with no consideration. So if you have made a gift or you have gifted it to charity, so if you have transferred some land or shares, but the recipient hasn't paid you anything, then in that case you will not have to pay any stamp duty land tax. All right. That was it. And that is end of our this chapter as well. This is end of our trusts. Now this chapter is, as far as stamp duty, land tax and this thing is concerned, it is important because examiner sometimes ask this, but trusts are not important at all for calculation, because examiner has stated in one of his reports that examiner will not ask any computational question on trusts, although he may ask you what is the trust, what is the exit charge, what is principal charge. It is very, very easy anyway. All right, please make sure you read the notes, and after that you will be confident enough to pass the exam on this topic. All right, so that's it for now, and I will see you in the next lecture with another topic of ACCA P6 taxation. Till then, goodbye.